Finally, we see some positive momentum in Paysafe stock, up by about 16% today on the news that Paysafe leadership, their board of directors, are buying up shares of Paysafe at these cheap prices. We're going to be talking about this move. We're going to talk about the decline in Paysafe. It went from a $10 stock to a $4 stock, and whether or not you should be snapping up shares like Paysafe leadership. So welcome back to another video. My name's Adam. On this channel I talk about cryptocurrency investments, stock market investments, swing plays, long-term investments, dividend portfolios, everything like that. So if you enjoy this video, please feel free to subscribe to the channel, like this video, and let's get right into it. So although this chart looks nice at 15% up today, if you're looking at the year-to-date chart, it's down by 70%. This was a SPAC play led by Bill Foley, and the SPACs generally start out at $10 per share, so it's trading at less than half of that. And it rallied up to by 93% to close to 20 bucks. 52-week high was $19.57 before kind of going back down, and it's down 77%. So obviously that kind of hurts any sort of investor. And the reason for this move is we're going to be talking about it in a little bit, but basically it's a loss-making company. They made quite a few merger and acquisition deals, but none of them were necessarily very fruitful, so they had to write that off, and they lost about over $100 million in their latest quarterly results, which I went over in one of my previous videos a couple of weeks ago, so feel free to check that out. And in response to that, the company went from $7 a share to down 41% in literally one day to $4.24. And I mean, it kind of kept dipping and was down by 24% at one point, where the 52-week low was $3.18. Now it's trading at exactly $1 above that at $4.18. As you can see, people liked the fact that the leadership purchased about 2.8 million worth of common shares. So that's the reason for this upwards move. So Paysafe CEO Philip McHugh announced that he purchased 290,000 shares in the common stock and open market for about 1 million, December 3rd, 2021. So that's like, what, 5 days ago? Additionally, other executive officers and independent board members have purchased around 447,000 shares in the open market, which that's about in the open market for $1.8 million between November 12th and December 3rd. And right now, of course, Paysafe is up pretty big on that news. And the reason why they went down is nicely explained in this article, and we're going to go over it. Paysafe, and this was 1 day ago, stock tumbled recently due to a company's slightly weaker than expected third quarter results. I mean, the company's quarterly results were down by a bit, and the stock plummeted by 41%. I think that was an exaggeration. That's why I didn't sell my shares in the company. Paysafe stock remains a great pick for some investors. Unjustified worries about the payment sector have also likely played a role in the stock's crash. Paysafe, by the way, is a leader in iGaming. It's the leader in secure payments, especially in some markets in Europe, and it has its own digital wallet. So again, if you're interested in finding out more, feel free to check out my previous videos. I made it, I think, 2 weeks ago when they came out with their Q3 results. I explained exactly why I believe in Paysafe despite the dips and despite the negative market sentiment. And if you're interested in the financial technologies or fintech side of things, Paysafe is a leader in that. The company's overall longer-term outlook remains very bright, making the shares extremely attractive at their current levels. And by the way, Bill Foley, he's the one that basically made this SPAC deal go through. He is renowned for making investments over the long term be successful. So that's also why I'm very confident in the management and the CEO of Paysafe. So overall Q3 top line came in slightly below analysts' estimate and fell 1% year over year. However, excluding the business the company sold last year, its sales increased 13% year over year, while EBITDA, excluding certain items, jumped 16%. Q4 net loss came in at 147 million, so they are burning through cash like crazy, which is obviously concerning, which includes a non-cash impairment charge involving intangible assets. To me, this just means that they failed at properly doing mergers and acquisitions. A lot of their M&A type activity was not very fruitful. In fact, its Q3 net cash from operating activities jumped 37% to 51.6 million, and its free cash flow surged to 70.2 million, up from 58.8 million during the same period a year earlier. So it looks like the financials are doing well. It's just management is really not doing their M&A stuff properly. And they also cut their 2021 sales guidance to 1.47 billion to 1.48 billion versus its previous outlook of 1.55 billion to 1.53 billion. But they still expect adjusted EBITDA between 90 and 100 million and 425 million, 435 million for Q4 and all of 2021 respectively. And they're addressing their digital wallet issues. Again, if you want to know more, check out the previous videos here. So we're just going to take a look at the stock price and some fundamentals. Market cap of 3 billion, 1 year target estimate of $6. So that's about, what is that? It's like 30% move upwards from here. And again, I believe this stock should be trading at a minimum of $10 per share. That's just my opinion. A lot of people were angry at this company. I was just looking at the message boards when Paysafe fell by 40%. I created videos on that saying that you should hold Paysafe, and I still think that Paysafe will go up even more in the coming months, especially when people take into account, we have the Omicron variant, but regardless of that, we're moving towards digital payments. You look at the crypto wallets, you look at the basically paying through your phone, stuff like that. I mean, it will have to compete somewhat with Apple, but they are the leader in iGaming. And if you look at the chart, obviously, it's just been on a massive, massive downtrend. The day went from $8 to $10 to $8, and this was a massive move, widening Bollinger Bands that signals increased volatility from $7 to $4. And now it's sort of starting to curl upwards. I really like this curl upwards move. You could get in here and potentially be riding this momentum even for a swing play if you're interested, but I'm interested in the long-term gains of this company. And finally, they're supposed to have growth of about 4% in 2022 based off on 9 analyst estimates. And so that's why, even though they have around, average estimate of 1.5 billion in growth, that's like a price to sales ratio of like 2 for forward price to sales ratio of 2, which is pretty damn cheap in my opinion. That's because of the lower growth rates, but I still believe if you like this company long term, this is a pretty good time to pick up shares while kind of management figures out all their stuff. So let me know what you think. Again, I appreciate a thumbs up if you enjoy this video, and until next time, I'll see you. Love you all.